Welcome to Get Soft in the Morning. Markets are actually up pretty nicely today. Last night they were, I think the Dow was up like 200 or so. And so, pretty interesting, decent moves here. What are you going to say? I mean, I got nothing. I mean, it looks like market is catching a little bit. Let's just call it for what it is. Perhaps it got a little bit oversold there for a while. It can't go down forever, can't go up forever, and I think that's really mainly what we're getting. I don't know if there's really any kind of change sentiment because I look at the markets as a whole, and I look at the broader markets, and then I start looking at some individual equities, mainly some of the bigger stocks, and they still look like crap. I mean, here's Facebook. That looks awful. Netflix actually doesn't look too bad. Looks like it's definitely in a reversal from where it was after that massive earnings miss over the summer. But it does look like it is in a little bit of a reversal pattern. Probably going to get a lot of resistance back up in this $300 range. Again, depending on what happens with the economy going forward. Literally, the warning flares are coming out, it seems, almost daily now from just about every company you can think of under the sun. I don't really know how to look into it other than to say, hey, look, just be prepared. Why would any of these companies, I keep thinking to myself, why would any of these companies really give a shit whether or not things are going to slow down? Because most of them are in a position where it's really not going to affect them anyway. I personally believe that the reason a lot of them are even saying it and saying it around this time of year is to create a little bit of pent up demand. Maybe force people to go out and maybe spend now that they have it, as opposed to kind of holding back. I mean, you would think the opposite, like, oh, people are going to hold back from I don't think so. I think people are a little more shallow than they used to be. People used to kind of, I think, be a little more frugal. I think today, now, they'd be more apt to go out and say, hey, look, I got the money. I'm going to just go spend it. Because that's just the way they are. I mean, again, that's just my opinion, but that's kind of why I think what's really happening, and a lot of these companies coming out saying, oh, there's going to be a recession, because I just really think they're trying to create whatever demand they can get here, and thinking that, if they said the opposite, people would be like, oh yeah, everything's fine. I don't need to run out and buy that thing. I have the money, blah, blah, blah. A little bit more reverse psychology. So anyway, I look at some of these underlyings in the indexes, and they still all look like crap. You got Micron. Amazon looks like absolute garbage as well, even though it has had a little bit of a run back from down here on the lows, down from 100. Tesla still looks like, from a chart point of view, still looks like a absolute piece of garbage. Even Apple not looking so hot here. This is a 4-hour chart. I mean, it looks like it's gone basically no place. And it's right down the board, and they all have earnings this week, so it's going to be a pretty interesting play. Let's see. We have I think just about everybody is reporting from what I seen yesterday on the report. So here's just some quick ones for tonight. I mean, I'm not going to go over the ones this morning, because mostly anybody who really announces their earnings on a Monday are usually companies that, for the most part, don't really want anybody to see it, because not a lot of people pay attention to earnings on a Monday morning. The ones tonight that are kind of sticking in my face a little bit is Logitech, but I'm probably not going to do anything there. We got Discover, Zion's Bank, a couple other ones, Aaron's. I didn't even think they were still in business. And then tomorrow morning, Tuesday morning, has a large number of underlyings reporting that I believe should really kind of set the tone on what's going to happen for the rest of the week. We got UPS, right? And I'll stick them up here as we go. And then talk a little bit about some earnings trades in those. UPS usually isn't the greatest of stocks to do earnings. No, it's not USP. It's UPS, you dumb ass. UPS, we'll put it up on a 4-hour. This doesn't look much different than much of anything else in the market. And we'll just zoom out. You know, pretty much similar pattern to just about everything else in the industry. There's definitely some gravity on this till about 120, right? You see that big, huge volume gap in there from 125 to about, 155 or so. So very interesting. So we have UPS tomorrow, and we'll take a look at that volatility on that one. We got General Motors. It's going to be another one that's not really, not really a player when it comes to earnings trades. Usually it kind of sucks. Looks like there's a bit of support down here at around $30. We got Coca-Cola. It's another one that's not really so much of an earnings play. Usually it's not really much you can do in there for earnings, but been holding up. You got Cliffs Natural, CLF. That one could be a little interesting because that has actually had a pretty decent move back. The stock was over $100 at one time. It was kind of a great trading stock, and kind of come back in flavor now. But we have them. That actually might not be a bad earnings play there. $16. Does look like it's kind of holding up here. It does have a huge volume hole under here, underneath these lows, about 13 or so. So that could be interesting. Also got Halliburton. Take a look at that, right? That's just been a beast, along with all the oil stocks. General Electric, I'm not even going to look at that because I'm not. Valero, another energy stock. This one's not really normally a very good earnings play, but I'm just putting it up there nonetheless. 127, and then we got the 3M. That may not be bad. 3M's not usually a bad one to play on earnings if the volatility's up there. Stocks has gotten absolutely just murdered. Actually well past its lows from the 2020. So that one could be interesting. Also have JetBlue. I talked about this one. The reason this is interesting is because it's cheap. $7, and it's literally actually took out its lows from back in 2020. So it's trading below its pre-pandemic lows or post-pandemic lows. Now trading at like 716, so literally right around there. And then last but not least, it looks like Raytheon, probably not going to do that. And then tomorrow night, Tuesday evening, we'll go over those tomorrow. But we have some biggies which are going to kind of kick off the rest of the earnings cycle this week, which is a big week because there's some big name companies all reporting. So we got Microsoft, excuse me, Alphabet, Google, Visa, Spotify, Texas Instruments, Skechers, Boyd, F5. Okay, so some big one's going to be tomorrow night. But let's look at some of these here, and let's take a look at UPS. All right, UPS. IB rank is actually up there. That's pretty nice. That's a pretty decent IB rank of 95. In fact, that seems historically high. Implied volatility is not great. We still got 25 days left in November, so November can be in play if you want. But if you look here, they did add a bunch of strikes. It looks like they added to 2.5 from 150 and above. They added 2.5 wides. You can see they're new because there's no open interest at all. But overall, if you look in here, right, you're out here in November, there's not really a lot of open interest at all. And let's get the pen tool real quick because, no, we don't want that. But not a lot of open interest in UPS, and it's generally usually kind of a piece of crap when it comes to earnings because it's not that liquid, which is kind of surprising. You would expect that it would be a little bit better, but It's really not. I mean, for $165 stock, I mean, here you have the at the money puts, and you really only have about 2K open interest out here. And then you actually go even on the call side. Look at this. I mean, 2K. I mean, terrible open interest, in my opinion, especially for an earnings cycle. So, I mean, and then I don't think it actually gets a very good rating as far as liquidity. Yeah, it's like a 3-star. So you got to be careful in here. And what are you really going to do? Well, they don't really have an expected move in here. I don't know what is going on with that. Something wrong with the platform, I guess. But I would expect it's going to be... I don't know why it's not coming up. Let's see if they're all... Let's just put up Coca-Cola, see if they're all having that issue. Yeah, there's no expected moves in any of the underlyings here on the platform. So tasty trade, or works, or whatever the hell it is this week. Way to go! What a piece of crap. Yeah, it doesn't look like anything is calculated in here at all for anything. So that's always nice. So no expected moves at all. And, right, how nice is that? So let's just I'm going to just do this real quick. And, because, let's go into privacy mode here. And we're going to have to go into here. All right. There we go. A little better. We're going to have to go into here and now look at TD Ameritrade. So UPS. Let's see. Market maker move is 11, right? So 11 is the market maker move. And then it's an $18. Excuse me. That sucked. Okay, anyway, $18 move for the November options, $11 for the market maker move, which is basically the front month or the current. But we're going to go out to November, so $18 move. So let's take a look at UPS. I don't know if there's really going to be a trade in here. Just looking at the open interest here, it doesn't look good. And I would have to say, I mean, my experience with UPS really hasn't been very good. So we're going down to the 150, and it's about you figure it's $20. So at 160, we're looking at the 150, possibly 180, maybe 185. Strangle. You're going to use a ton of buying power on this, which, again, is what makes this very hard stock to do an earnings trade on because the buying power is so high. You are getting a pretty decent amount of theta in this trade. I mean, so if you want to burn $1,800 worth of buying power, you could potentially get yourself into a trade that it says it's 0. It's probably close to about 60. If it's 78%, 50% of max profit, this is probably in the high 60s. Again, something's going on with this platform this morning. I don't know what it is, but it has these issues from time to time. Still hasn't made the cut as far as development cycles. Still probably out to the cheapest bidder. But anyway, that's about what you're looking at for a strangle there. I don't really think I would spend that. Plus, what I don't like as well, I really don't care for the fact that there's not a hell of a lot of open interest down here to 180. Most of your open interest is at 190 and 185. So that's kind of an issue as well. Not that I think it's going to be illiquid. It's just, again, I would expect it to be a little bit more subscribed. especially during an earnings cycle. So that I'm finding very weird here. But this stock in general never really is a good trade for earnings anyway. But if you're going to do an earnings trade, that would be step one. And then step two would be to do the iron condor. I would avoid doing 10 wide in this only because you're not really going to be able to do it down here. I mean, you could. I just think you're going to use too much money. But to me, that's actually not a bad trade here to pull in $1. You could probably do this one for $190. And you're going to use $300 worth of buying power. That's really not that bad of a trade. And let's look at that one on the curve. So that would be UPS. That would be an iron condor. That would be the 150, 180, 185, 145 iron condor. You can see pretty straightforward trade. And you have 25 days basically on that one. You legitimately only have maybe 10 days because you're going to want to look to do something with this in about 10 days or so to do something, whether you roll it or whether you get an IV crush right after earnings and get out. So anyway, there you have it on UPS. So that's actually not a bad trade. I would actually stick that one in the wheelhouse. That's not very bad at all. Let's take a look at General Motors. Usually this one blows for earnings. Honestly, this is usually just a really piece of garbage. Usually, let's go back to Stink and Swim. And we're getting $1.50. That's, again, there's not much there. $4 if you go out to November. So let's just take a look at November. $4. We're at $35, so you're looking like at a 30. You're looking basically like a 30-40 strangle. And I mean, overall, that's actually not bad, especially if you can do this for 95 cents. You're really not using a lot of buying power. $350 of buying power. You bring in 95, make 100. You're at a 73% pop. This is what it looks like. I mean, you got a pretty broad landing zone. What's the likelihood of General Motors really banging it out of the park? I don't really see it. I see it kind of staying within its expected move. But then again, we've seen crazier things, but that's actually not a really bad trade either. And you're more advantageous to do, rather than screw around with an iron condor, you're better off having this be uncovered because you're really not going to save yourself much money in buying power by doing a covered trade here. So they're kind of paying you from a margin perspective to be in the uncovered strangle. I mean, so that in itself really isn't a bad trade either. I mean, that is actually a pretty nice trade, and then obviously, right, you might have to, because I get feedback all the time. Somebody said, oh, that doesn't really seem like a good risk reward. Oh, it doesn't. All right, so will you tell me what you do then? Like, other than be directional, right? Otherwise, you're just being directional. You're just trying to take a stab at which way it's going to go. I mean, you tell me that whatever trade you're going to do has got a better than a 73% probability of profit if you just bought calls. No, right away, as soon as I get directional, I'm automatically in a 50% situation, right? I got a 50-50 shot of it to work or not. This, I have more than a 50% shot because I have a bigger probability of this landing in here in this zone than blowing out one side or the other or moving in one direction or the other. So anyway, so there you have it. And so the nice thing about this is, again, the buying power really isn't that bad. I'm not really a fan of it. General Motors usually sucks for earnings anyway. It's usually a piece of shit, but I figured I'd go over it anyway. Coca-Cola, same thing. Same thing here. This stock's really never anything worth trading for earnings. It's probably got a very low expected move, probably like $1.50, maybe $2 tops. Not even $1. Not even $1 on the expected move. $3 out in November. So I mean, and again, I don't know. You're not doing anything in here. What the hell are you gonna do? I mean, it's at $56. So you're looking at the 60 calls. You're gonna get 30 cents. No. the 60.50 or maybe the 52.5. I mean, you're not getting anything for this. You're going to use $77 worth of $700 worth of buy. There's nothing here. Coca-Cola's a piece of crap. For earnings, I mean, I'm not saying it's bad stock. I mean, I own the stock outright in my account as a stock, but for earnings, no, not so good. Clips Natural. This is going to be another one that's probably going to have a pretty decent, I would expect, expected move. Let's see, CLF. $1.20 and 270. So 270 at 16. The margins are going to be excellent here. You're probably going to want to do a ratio, whether you do a put ratio or you do a call ratio. You're going to want to do a ratio trade. You know, you can see the margins in here are absolutely phenomenal, right? It's only a $16 stock. So that would be the put ratio, would be the 15-14. I don't know if I would actually get up, and they did add a bunch of strikes. They added the 50-cent ones in here. If you did a full-blown strangle, I would probably go closer to the money. I'd probably do the 16. I'd probably sell the 16 put for $1.07 because I could sell the 16 put. That puts me down really at $15 for my cost basis. So I kind of have a dollar to the downside, and then probably sell like the 19. And that in itself may not look great on paper, but, you know, as far as like buying power, no buying power at all. $293, 150. You could probably sell this for $1.50. You definitely are skewed delta positive in this trade. I don't know. I might look at something like that in here, well, because it's so cheap. And you know what? If I get assigned, I get assigned. You know, what are you going to do? It is what it is. And then I get assigned, and then I just roll my calls down hard, right? So if I get assigned, or I have to get assigned, and my puts get pressed, I'll just come in and roll those calls down. So that's kind of the trade I like in CLF. I kind of like that. CLF's usually a player, right? On earnings, it does move. Volatility's pretty decent. And I like that trade. So it's the 16-19 strangle. This is what it looks like on the curve. Right? Looks fairly tight, but well within the expected move, at least on the upside. And that is Cliffs Natural. Halliburton. Let's take a look at Halliburton. That's probably got a fairly decent that's kind of got a fairly decent IV rank, and also got a fairly decent expected move. $4. $4 out in November. So that's pretty good. Not as liquid as I would have expected, honestly. Some of these numbers down here are a little... Didn't really expect. I kind of expected them to be a little bit. I mean, got the 32 strikes, got some decent interest there. So it's at $34. So what are you looking at? Like maybe a 31, 37 maybe, or even a 36. Probably the 31, 37 strangle is kind of where I would sit. Bringing in almost exactly the same. It's about equal deltas on both sides, about the 29 or so. You're bringing in $175. You're using $390. Kind of like that trade in Halliburton. Again, not using a lot of buying power. And I do have the capability to manage this a bit if I have to, right? It could roll puts down, roll puts up, roll calls down, blah, 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 blah. So I kind of like that one. For Halliburton, IV ranked 68.8. Not too shabby. So far the players are going to be Cliffs, Halliburton. I'll throw Valero up there. This one's not normally a very good one to trade for earnings. Usually it sucks. Again, it's not... It's okay liquidity-wise, but there's a lot of holes here. I guess they added all these strikes, usually when they don't have any volume or any open interest. They've added them. But margins in here are going to be an issue. And right away, I'm probably going to be looking like a 120, 140 right out of the gate. You are going to use some buying power on this, so it's going to be tough to do a strangle. And a $16 move. So I was about right. I can figure these out by now. So it's about $16 or $17 in each direction. Basically about right here. Probably going to go up to the 145 to stay in the expected move. So you're looking at like a 120, maybe even a 115. So you're looking at a 115, 145 strangle. I don't really know if I want to tie up $1,200. You are bringing in $400 on this trade. A pretty decent theta number there. Probability to make 50% of max profit, 84%. So I assume the pop here is well over 70. That's actually on paper. That's actually pretty nice. Problem is Valero not one to really kind of, I don't know, not one to usually explode one way or the other. And it's usually not one to maybe get a very huge volatility crush either. But nonetheless, that would be one I would throw out. Again, that 1,200 is going to be tough to swallow. Let's just take a look at if we would do a wider iron condor. So maybe you did like a 10 wide and chop. Now here's something funny. See, I just covered, right? See how I just covered the bottom end of this trade? You see how the margin almost doubled? Isn't that crazy? But then I could do it naked and it's less margin. Just crazy how things are calculated. So here's a 10 wide iron condor. This actually isn't a bad trade. If I could do this for 265, we're going to bring in 265. Decent theta number, almost an 8, 7 and change on an iron condor. That's pretty good. Usually iron condors are like single, usually 3, maybe 4, but a 7's not bad. Use $700 worth of buying power. And this is what this one looks like on the curve. This one doesn't look too bad. What happened? What is going on here? This is all messed up. Look at this. All right, there we go. This is what this one looks like. Look at this. So platform's a train wreck this morning. So anyway, the 115, 105, 145, 155, Iron Condor, pretty decent landing zone there, I think. Well outside of the expected move. Not using much, $700 worth of buying power, bring in probably 265. So Valero, not bad. Not bad. Throw that one out there. Not a bad trade there. And then let's do 3M. MMM. This one's okay when it comes to earnings. Most of the time, it's kind of a, it's not the most liquid. You can see here, there's not really a ton of open interest here, and they did add a bunch of strikes. You can see a lot of zeros. Let's see what the expected move is. MMM. So $4 and $10. So $10 expected move out in November. It's basically 115. So you're looking at like maybe a 125 or a 130. Not really much premium in here at all. You can see even when I'm at the 130, I'm really not getting paid much out there. I'm going to have to come down into the 125 if I really want to make this worth my while. And then I'm probably looking at about the 100 or probably the 105. There's your $10 move there. Again, that's going to be a tough pill to swallow, $1,500. Not really in my wheelhouse. Let's take a look and see if we did an Iron Condor. I don't even know if that's really even going to be worth it either. I mean, that's not too bad. If you could do this one for 150, if I could do this for 150, the 5 wide Iron Condor, I would do this trade. I don't know if you're going to be able to get that for 150, but that would be the 3M earnings trade that I would do, the 105, 100, 125, 130. Use $360 worth of buying power, bring in $150. You probably got a pop of about 60% or more. Especially, again, it's not calculating right, but since the probability of profit to make 50% of max profit is over 70. Usually the pop is about 10% lower at that point. So I'm just going to call it 58 to 60% pop. But there's a 3M trade for you, and that's really the only one I don't really see doing a strangle in there. Just too much buying power. And then JetBlue. This one's probably going to be pretty cool because it's cheap. I would have expected there to be much better open interest in here, and there's not. In fact, the open interest in here is actually pretty horrible. Considering, I mean, you don't even have any real strikes here with a ton of open interest at all, other than the 8s and the 6s. This is bad. It's really bad. Not very. I'm a little shocked by that. The only thing you're really going to be able to do in here is really some kind of ratio. I don't know if it's even going to be worth. I mean, you're not doing no strangle unless you want to get 18 cents. You're really not doing anything. And you really got to do a ratio. Probably the trade in here that I would do, and I'm probably going to, get burned on it again because I got burned on it on Snapchat. Well, it's not killing me in Snapchat. I mean, would be to cover call. It's probably your best bet. Like an 8 covered call. Buy 100 shares, sell the 8s. Bring in an extra 30 cents. Bring your cost basis down to $6.95. Use $300 worth of buying power. I really don't see anything else you can do in here. The premiums are kind of bad, and the liquidity is pretty bad too. So I thought this would be a little bit more interesting play. But it's not, and that's it. That's really all I got. I would avoid doing anything else. The covered call is really all you got in there for earnings, if you want to indulge. And that's it. And so it looks like markets are actually kind of firming up a little bit here today. Having a pretty decent morning. Nothing crazy. Natural gas continues to collapse. To my demise, I'm actually long some natural gas. I added a little more on Friday. So that's not going to make me a very happy guy today. But hey, what are you going to do? Life sucks. And so does trading sometimes. Sometimes you make bad decisions. So I'm still bullish on natural gas, though. Out in, let's take a look. I think my positions are down a couple $100. Here's my natural gas position. Yeah, I'm down $100 in it. So, and there you have it. So markets overall looking pretty good today. Again, I'm going to sit on my hands for the most part. I'm not really going to be trading much. I'm going to do some of these earnings trades, obviously, that I talked about. So we're definitely going to do Cliffs Natural. Definitely going to do Halliburton. Halliburton was a good one. 3M was another one. Valero wasn't bad, right? We're going to try to take a look at that. And then JetBlue, you got to be the judge of that. That one's going to be tough just because there's not really a lot of premium in there. So anyway, that's the show. Go subscribe over to Rumble because I am simulcasting over on Rumble as well. And please follow over there because as soon as I get 100 followers over there, I'm going to shut down YouTube and exclusively go over there. So thanks again. Have a good day.